Welcome back, everyone. This week, we're going to be looking at charts, looking at some technical levels, some support levels, and what's going on in the market. Initially, I was just looking at a few charts that or companies I've been tracking and seeing where they set up nicely on the chart for a buy point. And then I was going to trade some of them because I didn't really have enough confidence in any of them, particularly to size them up to any meaningful size. So then I was going to put on trades, and then I kind of just made this video to kind of discuss that more. But then I realized that I'm risking, say, 10% to make 20%, and I'd rather just have the cash to deploy into opportunities when they arise. So I didn't do that, but this video remains. Anyway, the first couple of charts I want to get into are just ones that I've been following, not really with the intention to buy, but just for entertainment, you could call it. And Canopy Growth Corp, CGC, cannabis company. This thing, I had no idea how horrible it has traded this year. And because it isn't that I haven't been following the cannabis sector, because I have. And things like Green Thumb are actually holding up pretty well for the year. It almost looks like a basing pattern. And then the question is, even if you decide that you want to own the company, the question then becomes, what's the inflection point? And by the time you know when and where that is, presumably other people will too, and then the stock will get bid up. So I'm not really certain about how to play that. And that presupposes that they're all trading at a large enough discount. So yeah, this thing's traded like death. And then at some point, like it traded up 40% on a single day this week. It's just fascinating stuff. But seemingly Tilray, CGC, Sundial, the ones that actually traded on the stock exchanges and not over the counter have traded like death this year. But Trulieve, Green Thumb, Verano, there's a bunch of names that's actually holding up a lot better, and for good reason. Bird Global, I've been watching this. I really wanted to do a deep dive on this just as a teachable moment. This company is the ones that have scooters, those rentable scooters throughout multiple metropolitan areas across the United States. This thing has been an absolute garbage fire pretty much since the beginning. And it's just astounding. Okay, now let's get into the names that I've been looking at. Turkey, iShares MSCI Turkey ETF. Look at that beautiful support level that it did bounce off of. And by the way, these charts are a couple of days old, well, a few days old, maybe Wednesday perhaps. And that is actually relevant because these are not the most up-to-date charts, because what we're looking at is the weekly time scale. And Turkey, for instance, pretty much started the week off on the 50-day moving average and closed above the 50-day moving average. And I think it was up 6% on the week. So that means it got down below the 50-day, respected the 50-day, and is moving above it. So that looks like something. TORM, TRMD, they're a clean carrier of fuel, put simply. They too are respecting the 50-day quite beautifully on the weekly chart. And what I'm not going to do a deep dive. I think these first five are ones I've really been looking into. So Turkey, TORM, International Paper. Here we have on the weekly chart, yet again, a double bottom, first in October, then again, we could call it June, July. I actually really want to buy this. I even made a video a few weeks ago about the cardboard industry, and I just can't bring myself to do it, because right now I'm sitting, and I'll tell you why, because I pretty much am going to run with, call it 25% cash at all times. Doesn't matter how large the portfolio is, and I'm now at roughly 25% cash. So to deploy capital in these trades, well, I mean, they look like really good trade. I'm really torn about it. About once every 6 months to once a year, I'll put on a few names as a trade, and then just go from there. Indulge in my compulsive gambling uh, impulses, and I'm really tempted. And I don't know if I will or not. So International Paper, double bottom, Pan American Silver Corp. I think this actually broke down. I could be mistaken, but I believe this actually broke down from this support over the week. It's not looking pretty. Vail. Now you don't necessarily see it on this chart, but what you do see is it supporting the 200-day moving average, and there's a couple year pennant formation, if you wish to call it that, and this 200-day moving average essentially shows you what the bottom of the pennant looks like, and well, just imagine what it looks like, at the top. So bottom of the pennant didn't break down, actually respected it. Very interesting. So those were the primary ones I'm really looking at playing. Yet again, I don't know if I will or not. So Turkey, Torm, Vail, Pan American Silver, I probably would have got stopped out of that one if I did put it on. And then International Paper, whatever the first five after Bird and CGC were. Alcoa, interesting. It's at a major support from June and July of 2021. And then it went there again in October, and now we're here again. Is this a weird looking head and shoulders? Is it right there now below the 200-day? I don't know. Mosaic, another one respecting the 200-day moving average. And you could say, well, how would I trade this? And it's something like buy it at the 200-day, or like, oh crap, I missed it. And then you say, okay, well, you buy it here, and then if it falls below the 200-day on the weekly, then you stop out. Let's call that a 10% loss. And then the question is, when do you sell it? Because another problem I have with these compulsive gambling things is, I might risk 10% of my portfolio in 5 names, and that's 2% a name, or something like that. And you put the stop loss at, say, 10% down, because that's just how it seems to be. And then you're playing for like 20%. And what's really irritating is, depending on how strong the broader market is it might almost get to your sell point and then rolls over, and you just round tripped it. I've round tripped names a couple times. I remember I played Clean Tankers a few years back, and I round tripped that like twice before I finally cut my losses. And then, of course, I think that might have been before COVID. I can't recall correctly, but eventually it ran, and had I held on a few years, I would have made a bunch of money, but it was a trade, and so be it. BTU Peabody. This one really respected that $17.50 support line, even though it broke the 50-day. And ever since then, it's bounced back quite hard. That would have been a good trade. And if you look back to September of 21, you could say, well, I probably should say October of 21. That was the beginning of the support line, and then you see it tapped it in July of 22, and then a few more times, and here it is. So interesting trade there. And they're actually paying a dividend now. Cheesecake Factory. Another name I actually really want to buy. It's not like it's a 10-bagger or a 5-bagger or hell, a 2-bagger probably, but Cake and International Paper, just two names I kind of just want to buy and hold, make a small position, add to it if it goes down. Probably won't, especially just looking back and anchoring bias and all those such things of how low it was. Got down to 25, and here it is at 35, and that would have been a good time, but whatever. Whirlpool, another name I was interested in buying, but at its lowest, it was called a $125 stock, and my portfolio is not large enough currently to be buying $125 stocks with low to medium conviction that are like a 1-bagger or a 2-bagger, perhaps. So, but that's double bottom, just like International Paper. And It looks like it might be breaking out. International, I believe International Paper looks like it might be breaking out too. Hasbro, interesting chart. Is it going to break out? I don't know. Kind of looks like it might, which is interesting because multiple of these consumer discretionaries and consumer durable stocks kind of to me look like they're breaking out. So what does that mean for the broader market? Because if this market can gain more breadth and not just have 8 stocks outperforming it, and an IWM, the Russell 2000, these smaller names, mid caps and small caps, can start catching up and playing their role in the market, could we go higher? It's worth asking. You tell me. Delta Airlines. I knew the airline stocks were running, but they're in May. Starting in May, these things have ran hard. They really have. And I find this interesting. One of the reasons I like to go through these charts is because I don't hear anyone talking about them. I don't hear anyone on Twitter really talking about these. Like Argentina. I didn't put a chart of Argentina up. I don't know how in the hell I missed the Argentina trade. I mean, I'm serious when I say that. I'm not saying there's not room to run. I'm actually waiting for a pullback. If we get one, I'll participate. If not, I won't participate. I almost bought a little YPF late last week, or late this week, you could say, and I didn't. But I'm tempted to, and I don't know. I mean, it has a beautiful basing pattern and then a breakout, and the names are running, and if you don't know what's going on with the Argentine presidential campaigns, might be worth looking into. Looks like a very interesting trade, and I missed the whole damn thing. It's quite irritating, but I did not put a chart of that up. Campbell's Soup, very interesting. It broke down hard and respecting the 200-day moving average. This would have been a good example. You wait for, just imagine it collapsed, and then you say, you're just completely speculating, or maybe you want the dividend. I presume it pays a dividend, and it breaks down that first massive red bar, and then you say from 51 to 40, 45, let's call it, and you say, if this taps the 200-day, I'm going to buy it. So you buy it at the 200-day, and then see how it plays out, and see if you look to the second last candle, you see it's a tiny little box with a long tail at the top and a shorter one at the top, longer tail at the bottom and a shorter one at the top. So within that week, this is why you have to respect, if you say I'm going to do it on a weekly time frame, you cannot get emotionally panicked on a day-to-day basis, because what you might have done was saw it dip down, violate the 200-day moving average, and then all you would have saw was a massive red bar at that point, and then dumped your shares. But then by the end of the week, it respected the 200-day moving average, and then the subsequent week, it went up. So you would have lost money. Both ways, you would have not profited as you would have so far in this trade, and you would have lost money because you would have sold beneath your buy point because you were trading a weekly chart pattern on a daily time frame. United States Natural Gas Fund. Interestingly enough, though, the one I had, GAZ, G-A-Z, it got shut down. And that was actually my prime. I actually held it in my portfolio for a moment, and then I was really concerned because it had like 50 million or 100 million assets under management. I was concerned about them shutting it down. That's not why I sold it, but I've never actually been really concerned about that. And I found it interesting that I was concerned about it, being that I've never experienced it and don't see it happen too often. And sure enough, they closed it. So I guess it was a good thing I got it out of that. So that's also why you see me putting up UNG and not GAZ, because GAZ doesn't exist anymore. But natural gas, that looks interesting. Then Walt Disney. So far, it's respecting that $90 level. even though it's below the 50-day and below the 200-day. Matter of fact, the 50-day looks like resistance. If you go all the way back in November of 21, resistance. Then finally gets another opportunity in early 23. I want to say that's around the Bob Iger time. I think Bob Iger came back somewhere within a few months of that. And then it ran up. And then it did stay above the 50-day weekly moving average for 2 weeks. But then it exhausted itself and then tried again in May and then failed. And so it's not looking the best, but I don't know. Use your own discretion. But that's the thing is, it's nice if you can have a technical chart pattern with a fundamental analysis, with a thematic expression, with an inflection point, with something more fundamental. It's like, I want to buy this stock, but when would be a good entry point? And you could say, well, fundamental analysis, the stock's worth this price, and if I think Walt Disney is worth $120 based upon my discounted cash flows model, those whatever, however you want to determine it, and you get all smart about it, and you say, well, it's 90 now. That's a 33% upside. I'll buy all day at 90 or at 100 or at 110 because there's still upside. And then you can say, well, is that enough upside? You can get in that argument, but I just find chart patterns to be useful to help tell you when to get in a stock. Because even if you're not playing the greater fool's theory, there are a lot of chartists out there and technical analysis going on and algos that do pay attention to these things. So inflections can actually happen around these areas. So you can't say that they don't matter because people make them matter, and as a consequence and association, it now matters to you, even if you don't utilize the tool, which is technical analysis. But I'm kind of a fundamental guy who looks at charts from time to time. I don't put too much into it, but it's worth recognizing and acknowledging. Dollar General, this bad boy, like this is a good example. The one I gave about Campbell Soup or whatever it was, you're like, if you buy it at the 200-day taps, okay, you hold it for a few weeks, you'd be up. This one, you say, Dollar General, if it hits the 200-day, I'll buy it. Then you buy it, then it closes above it. Okay. Well, first it's on an intraday, it closes below it, but at the end of the week, it closes above it. But then, my goodness, look at the following week. That thing goes from, let's just call it 204 down to, at some point, 160. Like, just incredible. And then the thing is, this is why trading chart patterns like this, especially on the weekly time frame, can be quite unprofitable. Because at first you're like, I'm probably risking 10% because, yeah. But then you wait for the weekly close. And so you would have bought at 204 and you would have sold at, call it, let's just say 165. Like, my goodness, man. You would have lost $40 on that trade, which is to say you would have lost 20%, roughly. Like, ouch. Which means, by the way, if you trade a basket, like I was talking about those 5 names earlier, so you were thinking down 10%, up 20%, asymmetry. Well, guess what that means? If you lose 20% on this, now one of those companies, the other companies, has to go up 20% just for you to break even. It's not even money in the bank anymore. It's just break even. So that's always something to consider. Advance Auto Parts. I eyeballed this one. This thing looks horrible. Like, if you go back to 22, in June, it hit the 200-day, respected it, bounced hard, hit the 50-day, that rejected it, then and then it goes down and just capitulates, and my goodness, just pain. like do you buy it? It's down a massive amount from its all-time high. I mean, 230 down to 70. It's down, 70%, 60, 70%. Just, all right, that's all the charts I have. So I don't have much to say in regards to my portfolio performance this week. Tidewater ripped. It did well. Just in a matter of a few weeks, it's up 40%. Uranium, I added another share, I think, on Friday's or Thursday's dip, fell like 4% or something. I bought a share, and it's now back to my largest single position. Like I said, I really don't have much to say in regards to what's going on. I mean, I made the Tidewater video a few weeks ago. You might say, "Wow, talk about the Tidewater." It's like I did talk about Tidewater. Well, why is this doing? Well, the Solstad deal closed, and they got an American bond deal done. And I mean, I didn't mention that in the Tidewater video, but the industry's consolidating, and they have pricing power, and people need them. It's like no one should be surprised. You know, it's just frustrating. These things boom and then they consolidate, then they boom, and then they consolidate, and it's not at all a linear development or path. And look, Transocean is up. I'm up 20% on Transocean. Pretty much from February through June, I was either break even or down. It's just, and now I'm up 20%. And that's just the volatility of these things, which is why a lot of people don't play these names, or they try to trade in and out and they just lose money inevitably. And Valaris up 12%. I mean, that thing's been trading. It's pretty much been a guaranteed in the red percentage loser in my portfolio all year. And now I'm up 12% on that. And the thing is, next week might be in the red again. That's the beauty of all of this. So far, so good. See what happens. And that's all I have to say on that topic. So thank you for watching, and until next time.